In today's energy markets, natural gas was the big mover today. We saw it down about 7.5%. Big trend reversal here. We saw natural gas now take out the $4 handle, so we're back below $4, settling around the $3.80 level. So some significant downside pressure here in nat gas as we move through the week. We saw 4 of the last 5 days. We saw nat gas down on the day, and today's drop was the largest drop in natural gas in 2 years. So we're seeing again with this global weakness story, we're seeing commodities across the board come under some selling pressure. The equity markets were down significantly as well today, and we're seeing that contagion play into some of these other markets. Other driving forces that I want to point out here are the production. A big production story. It continues to unfold here. When you look at the EIA expectations, the forecasts have shifted now again for natural gas. We continue to see increased production, and the EIA came out with their production forecast for next year, and it looks like they're going to get a much larger increase in production than what was initially forecast. I think that's another driving force here why we're seeing the weakness this week in natural gas, as well as the rig counts. So again, with that production theme, we saw natural gas rig counts pretty much stay the same at the higher end of the range. We did see oil rig counts come down. However, natural gas rig counts maintained their high level here over the course of the summer, and we're not seeing much give up there. So once again, that production continues to ramp up as we see other factors playing into this as well. When you look at the shale production that's being converted now into natural gas. Also, China, I think, is another factor that needs to be considered here. We got some very weak economic numbers out of China. It looks like there's going to be some slowing there. That's perceived as decreasing demand potentially in the future as well. So again, that theme also impacted, the equity markets and other commodities across the board. That global slowing storyline continues to filter through the markets, and that's putting increased pressure on a lot of the commodity space as we close out this week.